Hi everyone, welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 Benesocky, and I'm joined by my co-host, 𝗖𝗍 Biniaz. We have another great show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to create financial freedom through passive real estate investing. Today, we are joined by
Kavitha
Baratakke.
Baratakke. Welcome, Kavitha.
Welcome.
Thank you for having me on. Tongue twister of a name.
Now, Kavitha is a principal at Cherry Street Investments and an Austin-based real estate investor and a full-time commercial real estate syndicator with over 10 years of investing experience in real estate. As an investor, Kavitha has successfully acquired, rehabbed, managed, owned, and operated several single-family and multifamily investment properties in Central Texas area. She sponsors commercial real estate investments in strong growth markets like Austin, Dallas, San Antonio, Phoenix, and Atlanta with her partners. So we believe this interview will bring tremendous value to starting out active investors and passive real estate investors to get a glimpse of how a sponsor manages and operates an asset. So again, welcome, Kavitha.
Welcome, Kavitha. Great.
So maybe you could, wonderful. So maybe you could start off by please tell our viewers about your background and your start in real estate, as I believe you had a job in the technology space for 20 years before starting out in real estate.
Yeah. So I worked, I came here actually from the US, I'm in the US, and I came here in '98 as a student and did my master's here and joined IBM right out of college. I worked in tech for almost 20 years, like you mentioned, and the transition to real estate was sort of gradual because I got into investing into single family homes in 2009 after the market crashed. I was trading options at the time, and if you have ever traded options, it's really volatile and it was all over the place. Enjoy that volatility because that's what makes money, right? But the problem is it's swings up and it swings down. So the money made is also the money lost, right? You win and lose really quick. And I learned a lot about trading from trading options and decided that I wanted to park my money in a place that I had to do less hand holding. And real estate obviously was the best choice for me at the time, also because it was the down market. The crash had happened and there were a lot of good properties to buy. So I got into my first real estate investment, single family home, nothing fancy, just a small little house, 3-bedroom, 2-bath. And I wanted to experience what it is to own a rental property, deal with tenants and all of that stuff. So I got started there and really never looked back. Here I am 12 years later, still doing real estate and planning to do it for a very long time to come.
Great. Wonderful background.
Yeah, that's fantastic. Now, in the research that we did about you, I realized you started as a passive investor. Now, a lot of passive investors are curious, and we get a lot of emails from our viewers about how someone goes from being a passive investor to an active investor. So do they save up until they can buy, let's say, a multifamily apartment building themselves, or would they start raising capital? It's kind of unclear how most passive investors pivot to be active investors like you are today. Maybe you could tell us about your journey and how did you achieve the transition from passively investing to being an active investor, please?
Sure. So when I started, like I mentioned, I was a single family investor, and I consider myself an active investor as a single family investor because I was actually buying homes, I was rehabbing homes, I was renting them out, I was dealing with tenants, I was doing the whole 9 yards. So from being an active perspective, I didn't consider myself very passive in that role because I wasn't just using a property management and letting go. I did everything. But when I pivoted into multifamily, I went into passive because of a couple of reasons. One, of course, I didn't know anything about, I was learning how to, invest passively and just learn how to do multifamily. Multifamily is a different beast from managing a single family rental, or maybe I had 10 rentals at that time. Still different from managing a 100-unit apartment complex, right? So I joined mentoring program out of Dallas. So that was my introduction sort of to investing passively. And I realized I really didn't need a mentoring program to invest passively. But I did learn some skills there that helped me kind of transition to the active side later. So in terms of, I mean, there's this one aspect of education, to transition from passive to active, you definitely need a lot of education to understand what the active investors are actually doing with these apartments, right? That cannot be discounted. I think having a mentor is also very useful to make that transition. But I think the most important thing in my case was just not the mentor or the fact that I had that education, was the fact that I really wanted to be active. So I think when I talk to a lot of passive investors, they're happy being passive. And I was there too, because I had a busy job and I didn't want to take too much else on, right? So I think passive investments is appropriate when you like your job, you're doing what you love doing, and you want to diversify into real estate. That's a great spot to be in. But if you want to be on the active side and you want to transition from your job to doing this full-time or even part-time, it's quite possible to be an active investor part-time, then you do want to learn and educate yourself first. I think that's the key to it. But also just take action. I think a lot of people get into this analysis paralysis where they educate themselves, they do everything, but they find it really hard to pull the trigger. Especially because there's more money involved in multifamily. So I don't know if I answered that question, but yeah.
No, we appreciate that.
No, definitely, definitely. Now, I kind of wanted to talk about in the real estate private equity space. There's so many moving parts, right? About an expertise needed to be a sponsor. For an example, when it comes to raising capital, there's all the marketing and in-person meetings and so forth. And on the asset side, there's finding the deal, underwriting the deal, managing the deal. I mean, the list really goes on. So what did the educational process look like for you? I know August and we've been in the space for the last 2 years, and we know how much goes into the self-educational part. So maybe you could please talk to us about that.
Sure. So when I joined the program, like I said, I was educating myself to be a passive initially, but it so happened that I started visiting these apartments, figuring out what the sponsors were doing on the operational side of things. So I spent a lot of time not only learning how, about, I wasn't trying to raise money at all, because my goal initially when I approached this passive investing was to invest as passive, but then ultimately probably buy my own apartment, because I was really tired of managing my single family home. So I wanted to transition all those homes into an apartment complex. That was the starting point. But where I ended up was completely different, where I still have my single family homes, and I've done a bunch of passive and active investments in senior living, a whole bunch of other investments. So it was interesting about what I planned and what I ended up doing were two different things, because as I kind of went along my journey, I realized I don't have to do this or this. I can do both, meaning it was good to have a single family portfolio. It's been great. So COVID happened. A lot of multi-family sponsors started withholding distributions, just to preserve their capital positions. So I found that having single family home was actually a good thing, because I was still paying myself. So it's sort of, I talk to passive investors and I tell them it's not this or this. Maybe you should look at how can I invest passively and how can I build my own portfolio as well. Maybe that's what it is. Maybe some people don't ever want to do a single family portfolio, and that's quite okay. So you just have to figure out how much work you're willing to put in and what you're willing to do. And then the education piece to switch into an active investor. For me, I feel like one of the things I have learned in my multifamily journey is that I don't want to do everything. I don't want to be an operator. I don't want to be an acquisitions person. I don't want to be a capital raiser. I don't want to be that all. It's very hard to do it all and do it well. So I chose my lane, and I chose to focus on what I felt like I was really good at and where my skills were. So when I talk to new investors, I always tell them now that if you're trying to do it all, I think you will end up doing nothing. So that was my personal experience, because my goal was buy my own apartment, run it, do everything for it. And I felt like at some point, if I did that, that's all I would ever do. And I would find it really hard to scale up. So one of the reasons I think I have been able to scale up to almost 1,700 units right now as an active investor is because I have a good team. I have good partners. We all take different pieces of roles and responsibilities in the deal. And I think we take on the roles and responsibilities we are really good at. So what I would recommend for someone watching the show is that you figure out what you're really good at, hone in on that talent and focus on it and let it grow, right? Like maybe you're a great acquisitions person, you're great at connecting with brokers and making those deals happen, then focus on it because that's your value add, and find partners who bring in the other skill sets and create a team, right? Because really multifamily investing is a team sport. You're never going to do it alone. You can, but you're never going to grow that business as big as it can be if you don't partner.
Yeah, very well said. A lot of times in the real estate private equity space, it's a piece of it's a pie divided into three pieces. You got the acquisition, you got value add, and you have the equity. So those are the kind of the, depending on where someone's expertise are, they could play the role there. And in your case, what piece of the pie is your expertise? Is it in the equity? Is it in the acquisition? Is it in the value add?
So equity, definitely. I spent a lot of time on acquisitions because initially I was hell-bent on finding my own deal. And the one thing I realized is that's not what I'm good at. I am not good at acquisitions, and I don't like chasing people down. I don't like, just the whole relationship building that it takes on the acquisition side. I think it can be a frustrating process. So you have to be very patient, especially in the market that we have right now, where one of the things is when you're a newbie, it's very hard to find deals because brokers are not talking to newbies to sell deals, right? They're talking to people who have a track record and who've closed before. So I think that is the challenge that new people face when they come into this market, is that it's not exactly 2008 when there were deals plenty and people were just looking for someone to buy them. Now there are plenty of people in the market, there are very few deals. So you really have to figure out how you're going to set yourself apart from the acquisition standpoint. So anyway, long circuitous route, but coming back to the point, I focus more on the equity because what I realized is through my tech job and my connections, I had a huge network of people who were exactly in the boat that I was 10 years ago, where I don't know what I want to invest in. I am over invested in the stock market, but I want some diversification. And I felt like this is a problem I can solve for them. And I'm already connected to all these people. So to me, equity just came naturally once I got started. I'm like, okay, this makes sense. I also enjoy the marketing aspect of it. So it just fits in perfectly with my personality.
I love that. I love that. Now, when did you start raising money, and how did you cultivate relationships with investors? How do you nurture those leads that you have? How do you keep them engaged? And how do you stay in touch with people?
Sure. So I got into it January 2019, almost by accident, because there was nowhere in my plan that I was actually going to raise equity or be a part of the equity piece in these partnerships. But I went to Florida for a multifamily event with Rod Cleef, and I met, I call him my unofficial mentor. I never really paid him or anything for being a mentor, but anyway, I met him, he spoke on the stage, and I said, hey, and I want to connect with this guy because he was an ex-techie who was in real estate now. So it was very similar backgrounds. Anyway, I talked to him for 10 minutes. He's like, why aren't you working with me on this deal? Like the next deal, I want you to work with me. And I said, I've never raised capital. I've never done anything like this. And he said, I know you can, you just have a personality for it. So I think I never really considered it because I was so focused on finding my 25-unit apartment that I would buy by myself that I never really considered actually doing a bigger deal in syndication. My goal was, I'm going to learn this really well, and then I'm going to scale up because I want to do my own deal first. So, but anyway, it so happened that I met him and he got me started, and I found it really easy on the first deal, although I didn't do a big equity. I didn't bring in a lot of equity into the deal. It was my first one and I'm still kind of getting used to it. But after that, I realized that it came easy to me. I didn't really have to work very hard for it. But one of the things you asked me was, how did I market? How did I set up a pipeline? So along the way, I hadn't quit my job yet. So I wasn't very comfortable doing a huge amount of marketing because I felt like I had a full-time job and I needed to be focused on that. So anyway, 6 months fast forward from that deal, I just talked to investors one-on-one, mostly people I knew. For a while, it was just, I would say, quiet, like I was just doing things behind the scenes. But after I quit my job 6 months from then, January to June, and I already worked on 2 deals in that interim. Because once the first deal happened, things just came, other deals just came and we connected with partners and it happened. So anyway, fast forward to June, I quit my job and that's really when I decided I want to push this out in a big way. So one of the things I started was—
This was June when?
2019.
2019. Okay. Yep.
Yeah, it's been 2 years. Yeah.
2 years.
Yeah. So I started doing a webinar, not webinar initially, but I started doing presentations to people, to groups of people within the city. So I set up like a meetup event and I started doing that. And then I realized, wait a minute, passive investors don't really want to come to these meetups because, again, you have to beat traffic, get there at 7 p.m, and it wasn't really as successful as I thought it would be. So I decided I need to take that online. And one of the things which drove me was I felt like I had to jump through a lot of hoops to start investing even passively to learn the stuff. But I felt like that journey could have been eased a little bit because, I mean, really as a passive, what do you need to understand? You need to understand how the deal works. What is the sponsor trying to do? What are the basics of syndications? How is it structured? What do the documents look like? So I felt like though that's the kind of education I wanted to bring to my potential investors and say, okay, I'm going to teach them how to do it. And maybe I'll do a series of webinars. And that's where the webinar started. So it's been about 2.5 years now, I guess, if I count the exact time when I started the webinars. And I've done over 100+ webinars on different topics. And then that just grew and grew. And so did my database along with that webinars. So it was just very organic. I didn't really envision it the way it happened, but it was cool. It was really, I think I have like 2,500 people plus in my database. So.
Great. And you're actively involved on Clubhouse. I remember that we've had a few conversations on Clubhouse sometimes in the past. I also want to talk to you about the kind of partnering with active operators that are in place and being that equity piece and the co-general partnership. How is that now? Looking in retrospect, initially your plan was to do a 30-unit kind of multifamily deal yourself and be the sponsor and find a deal, underwrite it, manage it, do the value add, bring all the investors and be the team all within one. But then as time went, the opportunity came and you partner with other sponsors. I'm assuming. How is that looking? Do you believe that now, especially for active investors who are looking to start in this space? Do you think that is a better choice to initially take, to partner with an active operator to come on board as co-GP, and then to possibly, if someone still wants to be the operator themselves, is that a better first step to take?
Yeah, I think that what you said is very key, right? Do you want to be an operator yourself? If that's the case, then I think it might be worthwhile starting that route of doing a small apartment yourself and learning the operational pieces. But as I went along, I realized I didn't want to be operating. I had enough of operations of my own portfolio for the last 11 years, and I really wanted to get away from operations. So I think the key is to figure out, what is it that you want for yourself and what is the best way to get there? To me, the capital raise piece is easy. If you're well connected, right? So I was well connected with investors already, and I had been talking about real estate for the last, 9 years before. So in their mind, I was a real estate person. right? I hadn't tried to brand myself, but I think it's a challenge if you're a person who's never talked to anybody about real estate and suddenly you tell them, hey, give me some money. It's going to be a hard sell, right? People want to give money to someone they trust and they know what they're doing with their money. So I feel like almost there isn't one way to do it right. I feel like depending on your skill set and what it is that you want to be doing, you have to pick a lane. So let's say I feel like, hey, I can go after those broker relationships. I've been nurturing them a while for my own deals, or I've been trying to buy my own deal. Then maybe you should nurture that. If you are wanting to learn the operational side, maybe you should find other people who are saying, hey, I need an asset manager to come on board. And I feel like the key is to find the right people to plug yourself into. And I still think doing it all yourself, maybe in a smaller deal, is challenging unless you have other partners to come into the deal with you. Because the minute you make yourself like this one person who's in charge of everything, I feel like it becomes a sort of a central point of failure, right? Like you have this one person trying to do it all. And I just don't feel like that the model is successful in multifamily.
Yeah, for sure. You're taking on too many roles at once.
Yeah.
I'm curious, have you ever had people invest with you that didn't meet you in person?
All the time, all the time. So I don't think I've met my investors, most of them because they're remote. I mean, I have investors in Austin that I meet in person, but I have investors all over California, Georgia. I keep looking at my database and I'm like, most of them are Zoom calls that people have met over Zoom calls at least. Because you, in some of these deals, which are called 506B deals, we have to have a substantive relationship with them. So I think most of that is over Zoom calls. And yeah, I think it's probably rare that I actually meet investors in person, except the people I already know.
Great. And for me to just take a step back is initially starting out as a passive investor in the multifamily space, that kind of give you a good understanding of, that investor sponsor relationship, what to look for. Is there enough communication? Is their projections correct? Now, has that experience also been helpful? This goes back again to people trying to start into the space. Maybe it makes more sense to start as a passive investor to understand, the process. So maybe speak on that a bit. And also just to add to that, any red flags that you would say that exist when looking to invest with a sponsor. For example, one of mine, which is not a very common item, but which it is common among certain groups of people within the space. But for me, that's a key is preferred returns. Again, depending on how the deal is structured, but preferred returns are very important for me. And that's advice I give to investors. So yeah, talk to us about the dynamic that you had with, as a passive investor, investing with sponsors, if there's any red flags and how that experience and how that helped you becoming an operator yourself.
Sure. So definitely as a passive investor, I would, as a former passive investor and still a current one, I do both passive and active investing. I think investing passively is a good place to start because you get an idea of the process, like you mentioned, and how it is to work. And you can go as deep as you want to, right? Like you can go to the properties that you're passively invested in. You can figure out what the sponsor is doing. So it gives you a good idea of what you might be expected to do if you're a sponsor, right? And also, I think if your investment isn't going as well, you also know what not to do, right? I have had both, right? I have had investments that didn't go so well, and I really realized what the problem was. A big part for me is communication. I agree with you on the preferred returns, but I think for me, the biggest part is communication. When I don't get communication from sponsor, I think, oh my God, what's going on? So that's one thing I think is super important, is that the timely communication, whether a deal is going well or not. I feel like the investors really need to get a window or get an understanding of what's going on with the project. Things don't always go well. Stuff happens, right? Life happens. Like we had a winter storm out of the blue, right? We had some properties very seriously affected by the winter storm. But I think communicating that to our investors in a timely fashion, and maybe even doing a webinar, or even when COVID happened, we did some extra webinars with our investors. So I think those are things that if someone's not communicating with me very well as a sponsor, that's a big red flag for me. So overall, I'd say yes, it definitely helps to have that insight as a passive, before you go on the active side, because one, you learn exactly what the sponsor is doing. And two, it also teaches you what you don't want to be doing. Because if you have a negative experience, you say, okay, this is not how I want my investors experience to be.
Do upon others as you want to be done to you, or something.
Yes.
Absolutely, absolutely.
I think it's a biblical term, but yeah, great. I really like
Now,
this next question
yeah,
here.
this is a great next question. A lot of times we hear the term financial freedom, and I've heard you say it yourself. What does financial freedom mean to you?
I think it's the ability to, I now define it as an ability to do what I want when I want. It really is that, because when I'm not and I'm not needing a paycheck to live my life, I think it frees you up to do the things you want to do. It's not retirement. It hasn't been for me. I work harder than ever, but I love what I do. I pick the people I want to work with. I pick the projects that I want to work on, and I work as much as I want to work, right? No more and no less. So I think all of those is the ability to live your life. Financial freedom is the ability to live your life based on your own wishes, I guess.
Yeah. And just to add to that was a great answer. Just to add to that, we have a lot of physicians who have partnered with us, invested with us, and are part of our database, and we have close contact with. And physicians have a very sensitive type of job, which they've taken years of education and to get to that point, but they're reliant on the income. They basically sell their time for money. They're very reliant on their income. This types of passive investing, especially in real estate, in multifamily, which is one of the safest investments in real estate space, it allows them to have an alternate source of income passively. So they can kind of just focus on what is the best sponsor to partner with and ensure they're being taken care of. But that allows for that as well. So just wanted to add that.
And slowly create that time freedom.
Exactly. I think that for me, as I created that income, I realized today, if I need to stop working, I can. Right. It's also my choice at this point to do what I want to. So 2 years later, I say, hey, you know what? I'm hanging my hat. I'm going to wrap up the deals that I have. I'm going to go to, I don't know, Bahamas and retire. I have the ability to do it, but it doesn't matter whether I'm doing it or not. I chose to like and love what I do, right? I think that is the most important part of financial freedom for me, is to wake up every day and be excited about what you're doing. Whether that's opening a nonprofit, whether that's working as a sponsor, it's the ability to choose your path.
Yeah, having that freedom of choice where you're not locked in on something is a beautiful
Right.
thing.
Yeah, I don't want to wake up in the morning and say, somebody has forced me into this meeting and I hate it.
Yes.
Right. Or I have to wake up and go to this job that I'm less than excited about. I think what August mentioned, a lot of physicians are huge income earners, but they're still trading time for money. I want to be in a position where I'm not trading time for money, but I'm setting up something that is making money for me, right? Like makes money even when I'm on the beach, makes money when I sleep. So that's passive income.
To live the life of your dreams. Beautifully said. Okay, Kavitha, I guess it's time to have some fun. Let's start the next segment of our show. We're going to be doing the 10 championship rounds to financial freedom.
Okay.
So just answer whatever comes top of your mind, and we'll get started. Who is the most influential person in your life?
That's a hard one. I have had so many influences. I'd say the person that I think impacted my life in a big way was definitely my father. I think he, at a very young age, imparted a lot of financial sense into me. Even though he worked a job all his life, he was investing in real estate. He built a real estate portfolio. So I think that was definitely very impressionable for me as a child. I love that he raised 3 children and he managed to do that on a job which wasn't super well paying by today's standards and in India. So I think that was definitely an inspiration for me.
Wonderful. What is the #1 book you recommend?
So real estate wise, I know everybody recommends Rich Dad Poor Dad. I think I definitely like that book too. But non-real estate, and I think this is just as important as technical real estate knowledge, is for me, it's The Alchemist. Some people don't get that book. Some people totally get it. I was one of those who didn't get it and then got it. And the idea is that you follow your heart and you follow the journey that you feel like, okay, I'm in the right place. You have this inner sense of intuition that you know when you're in the right place. And that book really taught me to listen to my inner sense of intuition and just follow a path. And I feel like that has been a huge, an important reason that I am where I am. I know that this is where I'm meant to be.
Incredible. If you had the opportunity to travel back in time, what advice would you give your younger self?
Invest sooner in real estate. Definitely. I wish I had bought more multifamily in 2008 instead of buying single family. If I knew this, I didn't know what I didn't know. So I took time to learn what I didn't know.
What is the best investment you've ever made?
An investment in myself, for sure. I don't think I could have been where I am without an investment in myself. Overall, I'd say education has been a good thing, but what's also been a great thing for me is I went to Tony Robbins seminars. And I think for me, that mindset piece is so important to success because you can learn all the technical stuff, but if your mindset is not in the right place, it doesn't matter. So I feel like that was one of very good investments for me. And I continue to make that in my life.
Great. What's the worst investment you've ever made?
I did go randomly on realtyshares.com and make this investment that I thought, it looks pretty good. All right. I wasn't thinking very much. And really, there's not much opportunity to do due diligence at that point. I didn't know how else to invest in real estate outside of single family homes. And I did pick some couple of things. And one of them was pretty good, multifamily. The other was a retail. And I don't know how they managed to screw it up, but they did in the last 5 years. So yeah, that's probably one of the worst.
Okay. How much would you need in the bank to retire today? What's your number?
I already have money in the bank to retire today. I think my bigger question is, what does retirement mean? Retirement, I'm already in retirement, but I don't think I'll ever stop being working. I love what I do. So for me, this is retirement that I enjoy. Would I tone down or scale down a little bit? Yeah, I'm in the process of figuring out how I can scale up the business, but not make myself a bottleneck, basically run a business which is not so dependent on me. That is my goal the next couple of years, to have a self-sustaining sort of business.
Wonderful. If you could have dinner with someone dead or alive, who would it be?
Tony Robbins,
Nice.
100%.
If you weren't doing what you're doing today, what would you be doing now?
I'd probably be still in my tech job. I hope not, but I don't know what else I'd be doing because I'm not a person who can just sit around. That was one of the things I told myself. It's like, okay, I could quit my job. I saw that on, when I did my numbers, and I'm like, okay, I have enough passive income. I could just do nothing if I chose to, but I don't know that I could do nothing. So I found what I love doing, and in the foreseeable future, I'll be doing this. I've also planned to kind of work in the intersection of technology and real estate because I feel like there is a lot to be done there in terms of tech and real estate, or what is called RE tech, real estate tech, or prop tech. So I feel like there is a lot of advancements that can be made there coming from my background. So that's probably what I'll be doing next.
Fantastic. Book smarts or street smarts?
Street smart.
Street smart.
Yeah, you could read all the books in the world. If you don't know what to do with it, doesn't matter.
True. True. Now, if you had $1 million cash and you had to make one investment today, what would it be?
Can I only make one?
Yes.
I don't know if I would just make one, but if I had to make one, I'd probably get into multifamily because it's solid.
Nice.
It's sustained and it's stood the test of time. So I'd pick a good location and put money in multifamily because, I mean, doesn't matter what's going on in the world. We saw that in COVID, people still need a place to live, right? I'd pick a good location, good tenant demographic, and put the money in the multifamily. And I know that 10 years from now, my money is in a good place.
Great.
Great.
Awesome.
Wonderful.
All
That was
right.
so much fun.
Thank you, Kavitha. We definitely are sure that the knowledge and the wisdom you shared will be beneficial to our viewers. Thank you for taking the time. We know you're very busy and joining us today. We really appreciate you.
Yeah, we really, and if you could just quickly tell our viewers, what is the best way that people can reach you? That would be great.
Sure. My website is cherrystreetinvestments.com. That'll probably be the best way to reach me. I also have a YouTube channel that I post a lot of investor education on. It's called Cherry Street Investor Education. Those are two good places to reach out to me. But if you want to really reach me, I mean, that's a good place to catch some educational stuff. But reach me, cherrystreetinvestments.com.
Wonderful. Thank you
Great.
so much for
Thank
joining
you.
us today.
Thank you for having me here, August and Eva. I appreciate your time.
Thank you.
Thanks. Bye.